Hello, today is Monday the 7th of April and the kind of dreaded Black Monday that everybody has been worrying about has finally arrived. We have seen a really nasty shakeout overnight in Asian trading and really nasty moves lower in Asian trading. However, as we head into the open, normally I would say if we were down at the lows and heading into the open, I would say that we are quite likely to see a relief bounce in US trading. However, today we seem to have seen a bit of relief this morning. I don't think it's related to anything that Trump has said about capital gains tax or anything else. And I don't think that this really is going to bottom until there is some relief on the tariffs or some deals done. And those deals could take a long time. It's something like hundreds of countries that have asked to negotiate, and that is going to take some time. Trump has been really clear since he was elected. He wants the longer end of, he wants at least a 10-year rate lower, and he wants $50 oil. And today we hit $60 in oil, which is a big round number considering when he came into office, the oil was at $80 in the US then. Sorry, that's my dog snoring. It isn't me. Considering he said he wanted $50, we're almost there, but these big round numbers in oil have a really big effect. So let's take a look. If we start with the weekly chart of this is front month continuous oil, and this is when Trump got elected and oil was at 80, and underneath this weekly 200 moving average, we could argue, I don't think we're finished with a three-wave move. We're not at $50 yet, which is where he really wants to get us to, and it looks like we're in this kind of declining channel, if you like. But this round number 60 could potentially have a little bit of an effect. And if we look at where we are on the daily, we have a little bit of a tail. The thing is, we had a gap lower in the futures in this. Let's look at this. We've got the trading session marks. I need to change those marks. This is the gap. So first of all, this the bottom of this gap and this previous low from last week on Friday is going to be initial resistance, and if we get into that gap above 61, I think we are likely to come back towards 62, 62.80 and test the bottom of test this broken support at 62.30. So stuff is looking like not too bad, but stocks of course are horrific. So let's take a look at where we are in some of those and why I don't think we've bottomed yet. So one of the reasons it's a really good place to bounce is here we are, first time back to this monthly 50 moving average, which, let's face it, ever since the credit crunch back here in 2008, 2009, when we got above it in 2011, it became support. And every time we pull back to these moving averages, this has been support. When we had the really nasty pullback in 2022, it was support, and the same in March 2022 post-COVID. So if we look at this on the daily, a monthly 50 is usually around that weekly 200 moving average, and this is where we are. We've gapped underneath the weekly 200 moving average, and I think that we are likely to come back and back test it from underneath. And my problem with this, when I look at this, is this swing that we started on the 25th of March, I would like to see 5 waves to finish, and I don't think we've done it. So we've done a wave 1, 2, 3, and if we make a wave 4 and another swing lower, then it's just going to be kind of one of those sell the bounce trades. I think we would at least attempt a retest of the lows, if not lower. Now, one of the things about wave 4s is they can be more complicated than wave 2. And if we look at this wave 2, we can see it was a very nice, simple 3 waves. One thing you can say is they're either equal in price or time. Now, if it's time, we're likely to see a 2-3 day bounce. And if it's price, in other words, the bounce is equal to this wave 2, that kind of is quite interesting, because if we equal the bounce from this lows, it puts us back into filling this gap perfectly and back testing therefore the top of this gap at 5,096. Now that 5,096 or 5,100 is a pretty interesting level for a number of reasons. Let's see if I've got that big 236 fib level. Let's put it back on. So if we zoom out here, all the way back to that credit crunch low, you know how I count the 236 fib as a really important level, and that comes in at 4,990, basically 5,000. So if we're going to find support from this pullback into this 236 fib and this weekly 200 moving average, then we need to hold above this 4,990 level as well. So if we look at this on the daily, we're kind of a little bit sideways here. I wouldn't be surprised if we saw, a couple days of just a fake out bounce, 3 or 5 waves. It could be little 5 waves in a wave 4, and then I think we'll see where we end up, and we could at least retest the lows, if not see another swing lower from here. If you're looking at this on an hourly basis, then you can see, because the futures are, this is really kind of quite important support levels, and quite a few markets are trying to bounce from here. So let's take a look at the Nasdaq. Same thing in the futures, we've got this kind of shallow bounce. We're 1, 2, 3, and I kind of favor this one more swing low if I measure. Wave 3 is very often a 1.618 or 2.618 of wave 3. We are kind of at this 2, which is a fib number. I think we are potentially setting up a little bit of a wave 4 here before we continue lower in this Nasdaq, which means again the top of this gap, filling this gap, which takes us back to 17,530. Watch out that we don't just do that, fill that gap, and then turn lower from there. If we continue lower, where again, this on the weekly, we are at this weekly 200 moving average. It was pretty messy last time we tested this weekly 200 moving average in 2022, but when we pull back into it in 2020, post-COVID, with this really sharp sell-off, this, which looks kind of quite similar to what we're doing now, was really important support. So what happens here around this 200 moving average is pretty important ever since we got above it again. Back after the credit crunch of 2008, 2009, it's been support all the way up, and here we are kind of testing it again. So really kind of an important place. The problem is that I don't think Trump has been really clear. He wants long end rates lower. So if we look at the 10-year yield, the 10-year yield is at 3.99 as we enter trading. Fed rates at 4.25. I don't think this has pulled back enough. And, on a lot of technical measures, this, again, from the 2020 lows, this is a big 236 fib. It's previously been pretty interesting support and resistance, but I don't think this is low enough yet. So I don't think that we're yet at a place where Trump is going to want to, having taken all this, spent all this political clout or capital on these tariffs and what he's doing, I think we might see a little bit of a bounce here, but I don't expect Trump to step in and say anything to delay the tariffs or to stop this rout until he gets rates down to where he wants, which for me is more likely to be lower and in the low 3s. So we're not there yet. We are actually, if we look at the 2-year yield, at a pretty interesting rate level and bouncing from it. And this is the weekly 200 moving average in the 2-year yield. But this is still, a 3.6. It's not, I don't think it's low enough for Trump yet to step in and stop this. I hate to say it, he keeps saying every time he's interviewed, he says we need more pain, and he's also stressed how 88% of stocks are owned by the top 10%, so this is not, his base, if you like, being hurt yet by the sell-off in stocks and risk assets. I think if this turns into a recession, which it hasn't yet, but could very likely, then those people will be hurt, and then he's more likely to step in and say something. But pretty interesting support levels, and because of what's happened, as I said before, we are at risk of more margin selling after the open. So, it could be that the bounce is over, we squeeze a little bit higher, and then watch out that we don't see some more margin selling. So that's what I'm looking at in stock indexes. And let's take a quick peek at gold, because gold, I think we could see a pretty decent bounce in oil from this round number level. But let's take a look at gold, because gold is bouncing back, and I think gold is a really interesting buy on dips. And I would argue here, if we look at this 4-hour, we've pulled back to the 200 moving average on the 4-hour, which for me is a really good trend guide. It's kind of around that it's kind of around that daily 100. We've pulled back to the swing lows from the end of March. We've made a 3-wave correction. I think if I was looking, I don't think this is a terrible place to be looking to buy a little bit of a pullback attempt in gold. If we look at where we are as well, we're at the daily 20 moving average. Now it could be that this is just the first swing of a bigger correction, and we could see gold sold as well for margin calls. But this is a really, really cool support level. So I think that gold, Bitcoin and oil are not terrible assets to look at buying or trading just to bounce in, and then we see what happens after the open. If everything rolls over after that, then obviously we could be in a little bit more trouble, and we continue. Trump is just posting on Truth Social now, no inflation, lower prices, and billions in tariff revenue. Okay, I find that really a little bit concerning, because the tariff revenue comes from American who have to pay the tariffs. Okay, it will get added to those prices. So that's where we are in these markets. Let's take a look at a couple of quite interesting stocks that I think are coming into pretty good levels. So first off, Nvidia. Now Nvidia, if we look, we're at these previous lows, and if we look on the weekly, so if we go all the way back to all-time original lows back in 1999 in Nvidia, here we are at the 38.2 fib level, and we're also at the swing low from September last year, and this kind of also is a pretty interesting level to bounce from. Here in the pre-market, we're exactly down at this low. I would argue that this fib level then becomes support and resistance at 94.65, and if we go down to the daily, I'm going to watch here, because if we see a bounce off the open, then potentially this 94.65 will become resistance. Remember, at 91 at the moment. So holding above 94.65 in Nvidia, I think could set us up for a bigger bounce. But if we get some nasty selling after the open margin selling, then that level is going to be resistance to continue lower. And for me, big picture, if we continue lower, 76.58 is the big level that I'm waiting for in Nvidia for support. Another chart that's pretty interesting is Palantir, one that I'm watching. Let's talk about why. Let's tidy this chart up. Sideways at these previous lows, here we are down at 69. I'm going to go all the way out in Palantir and say that there is a chance, if we measure from this low, let's put our fibs on from this low. Down in the pre-market, here we are. Whenever I look at a chart like this, I would say, well, a pullback to 50% of this entire rally on the monthly, which, let's face it, this is the entire rally, and this previous swing low would be a really interesting place to look for support and to be buying this. In the pre-market, here we are at 69, and this big deal, and it is a really big deal, 50% level is at 65.66. Also, I think you can see this swing low. So down here in the pre-market, if we were to gap down to here, I think this is a pretty interesting level to have a look at taking nibbles at buying. You can see on the close that we were nowhere near there. We're not quite there yet. But 65.66 is a really big deal in terms of these previous support and resistance to maybe take a nibble at this one. AI and war, you can't really kind of beat that combination. We seem to be heading into a world of both, don't we? So finally, let's take a look at Bitcoin and what's going on in Bitcoin on the weekly. Let's go back out. Here we are for the first time in Bitcoin, back to the weekly 200 moving average, which has been support ever since we got above it in 2023. Here we are 2 years later. You know, we had really good support last year from this weekly 50 moving average, and here we are again. If we, as I said before, 50% of each of these swings, this 50% level has been really good support. So if we take this most recent swing, that 50% level was the level that I said was really important, that we really wanted to hold, and we need to get back above it. So if we look at what we're doing with this bounce, let's go down to the hourly in Bitcoin. This 79.25 level is going to be the big resistance that we need to get back above. There are, with this bounce, I see people nibbling. I think we've also, this is going to be an interesting level, because if I look from this swing high that we made here on Friday, we could also argue this is 5 wave down, 1, 2, 3, 4, 5, and so back to the top of this wave 4 would be a proper level to come back to. So there is a possibility, we're at 77 at the moment, that we come back to 79.285. How would I be trading this? Here on the hourly, I've been nibbling this. We flipped the hourly moving averages and pulled back and found some support from this. This hourly 200 moving average, I have to say, and 50% of this swing on the open, or this 61, we could see a bigger pullback here in 76. If we kind of did one of those 61.8, 38.2 fib moves, that's kind of where, let's put that in from this just most recent swing low. If we drop underneath 76.84, I think here I might buy back some more on this 5-minute chart. Again, what I'm doing is I'm putting high Kanashi candles on. Looking 3-wave pullbacks that go from red to green for me are really nice, interesting buys. And so something like that here would be a really nice, interesting buy. So that's how I'm trading this. I'm waiting for the open shakeout first, and then I'll buy the dip after that. So that's how I'm seeing Bitcoin. Really though, 79.200 is the level that we need to get above. I would not be surprised at all if we got up here, and the first time back we get rejected. A bullish pattern here, one pattern that the market tends to make very often is if we overshoot a level, so let's, or on the upside or the downside, but if we have overshot or gone beyond this 50% level that the market wanted to hold, here at 79.285, the most common pattern you see is an inverted head and shoulders pattern. So if I put this up to a 15-minute, if that's the case and we get rejected here, then the most bullish pattern you could see here would be an inverted head and shoulders pattern with the neckline at this 79.285, because getting above it, that would, for me, be a much better bottoming look. So that's how I'm seeing Bitcoin as we head into the open. Just watch out what happens after the open and whether this margin selling continues or not, or whether we're likely to have a little bit of a start of the week, day or two bounce. Remember, bear markets tend to rally early in the day and early in the week, and so they are selling opportunities. So good luck, okay?